Hey guys, it's Hannah and this is the weekly market wrap-up. I hope you guys all enjoyed your week. The overall feeling I have about this week in the markets is pretty pensive. Let's get into the equity sector and figure out exactly what happened. American indices are looking pretty robust even despite some volatility in the Japanese markets, with the Nikkei index down another 5%. Dow Jones was up over 80 points on Thursday's intraday trading, but at close they lost a majority of those gains anyway. The S&P 500 did slightly better, closing up 0.37%. Now, because of some hints from the Fed, many were speculating a probable stop on QE. But due to less than favorable economic data points, it looks like quantitative easing programs will most likely continue. First-time unemployment claims unexpectedly rose. Latest government readings on GDP for the first quarter came in slightly underneath forecast, and pending home sales rose about 0.3% in April. A bit of a disappointment though, as many analysts were expecting a 1.1% raise. If we look at the facts, the US market is actually pretty strong. The gap between the 50-day moving average is 7.3% above the 200 DMA. This is the greatest divergence since the May of 2012. Now with that said, the context is quite different compared to last year. The market was moving up before the Eurozone crisis took everyone down. Currently, every major economy is focused on reflationary policies, and we have not seen a sustained downside movement for over half of a year. This only leads us to suggest that we may see further upside before we see a major correction. Moving over to currencies, pretty dramatic fluctuations in the Forex market this week, particularly the US dollar-Japanese yen pairing. That was challenging the 103 level before hitting against unexpected headwind. The pair is now trading in the upper 100 range. A further lift in this pair is expected and should provide a necessary boost to the Japanese equities market. Over to winners and losers. Clearwater Corporation was our winner this week. Clearwire was making incremental gains throughout this week. It spiked up just over 29% on Thursday. These gains were mostly sprouted from a bidding war between Sprint Nextel and the Dish Network. Now, originally, Sprint Nextel offered a bidding of $2.97 per share, but the ensuing auction took the offer up to $4.40, which was the latest offering by Dish. That's a 48% increase over the original offering. That's crazy. It is clear that the Clearwire shareholders are the real winners in this situation, who are obviously going to benefit from the increased attention and the cash flow these two giants will bring into their investment. On the losers side this week is ARCA Biopharma Incorporated. The stock was getting hit pretty hard during the middle of the week, and then suddenly on Thursday, the share price dropped nearly 31%. The stock is very close to bottoming out and retesting its all-time low. That means we could still see further downside, so even adventurous investors should tread carefully. Fundamentally, net income continues to run in the red, while their balance sheet shows that ARCA is bleeding cash, reassuring us that this is a company you want to steer clear from. Moving over to precious metals, gold bullion started to pick up based on market speculation. That QE is still on, so gold closed above the prior session. It's still too early to call, but it looks like the volume is picking up and momentum is looking pretty bullish. Silver also had a good day on Thursday based on the speculation. It closed up against the prior. Now, although positive momentum has entered the market, more question marks remain for silver. There is significant bearish activity in the SLV derivatives trade. The average put-call ratio stands at 1.04 for the remaining contract months through January 2014, which means that traders are more heavily leveraged on bearish positions rather than bullish ones. This virtually guarantees that despite other fundamental drivers affecting silver, the derivatives market will make this ride a very nasty one. Now, I know we keep mentioning this, but I really do feel like it's important. While the bulls and the bears continue to wrangle over gold and silver, palladium has silently given its investors both stability and capital gains profits. It is the only precious metal that is trading up against the beginning of this year, and the trend should continue. The next real challenge for palladium is exceeding the 760 barrier. Once that is overcome, we could potentially see $800 palladium by the end of this year. And that wraps it up. Thanks so much for joining us for this weekly market wrap-up. We'll see you next week. Don't leave before subscribing. Make sure you follow us on Facebook and Twitter. And email me what you love and you hate about the weekly wrap-up at info@viralnetworknews.com. For VNN, I'm Hannah Bernard.